Well, we're very pleased to announce that we've indeed had our first closing on our 500 million fund just 3 weeks ago with 350 million of capital raised. That's 70% of our goal. And most of the investors are repeat investors that have been coming to our funds since Fund 1, Fund 2, Fund 3. Mostly institutional capital, so Canadian investors, US investors, pension plans from all over the world. Many European family offices and so forth that have been with us for a very long time. And we're very pleased to announce that. Our second close will occur in the first quarter of next year, so probably by March 2022, and we are anticipating probably closing the balance, so the full 150 million. And we might do a third close a little later on in the year, something like in June or July. Well, the Incus strategy is identical to what we've been doing for the last decade. First of all, on returns, we're targeting 15% gross IRRs and a net 10% to our investors. As far as the multiple is concerned, we target a 1.6 to a 1.7 gross multiple, giving roughly a 1.45 to 1.5 times to our investors. So that's on the target return side. As far as the sectors that we target, it's exactly the same as we've been doing since the last 4 funds. And we target mostly real estate assets, infrastructure assets, and renewable assets. And this is in all of our target markets of Southern Europe. And we define Southern Europe as Spain, Portugal, Italy, and France, so more the Mediterranean countries. As far as the product itself, like the actual debt products, it's mostly first lien products. Or first mortgages when we're talking about real estate. So about 70% of our loans are first lien, so very senior secured type of loans. And then the balance tend to be more mezzanine-like. Incus is an asset-backed lender targeting mid-market companies in Southern Europe. The companies that we target are companies that typically the banks don't focus on as much. So really what we want to do is offer a complementary product to the banks. So we don't compete with the banks, we complement the banks. What we tend to be is transitional capital. So it's capital that goes between the equity and the bank financing. So we come in the middle of both the equity or the bank financing. And generally the banks are the ones that take us out of our positions. Although we make a loan for 4 to 5 years, to a company, again, more of a mid-market company, a PYME here in Spain, the banks, once they're able to get the financing for the banks will take us out of our financing. So we act more as a transitional capital for those companies. And this is why we get a higher return for our loans, because the banks will lend at a very low rate. The equity is very expensive financing, and we just fit in this middle here, and we act as an accretive financing to the companies that are looking to do either an acquisition or dispose of an asset or in preparation of an IPO, these types of events. So there's always an event where we act as a transitional capital between, once again, the equity and the senior financing. Well, considering Incus versus fixed income products. Now, fixed income products, of course, are easily accessible. You could buy fixed income products in the liquid markets, whereas Incus is not an easily accessible product. What we like to think about ourselves is to say that we're more the alpha to what you could find in the market being more the beta. So if you're looking for exposure to the fixed income market, you could find it in the listed products, you could find it in a direct lending fund, and this gives you more just exposure to fixed income. What we are is more alpha. So let's say you have already a little bit of exposure and you're looking for a little bit more returns. This is where Incus fits in. The direct lending funds, names like Blue Bay, names like CVC, you can access them and they're distributed through the large networks, the large banks and so forth. And they give you more of a, call it 5 to 6% return. Incus, at our 15% return, we tend to be more the alpha. So we very much complement these other fixed income products. Really for Incus, all markets are ideal for us. We are flexible capital through the credit cycle. So if we're in a down market, we see a lot of opportunities, companies needing capital because the banks aren't there, they tend to retrieve a little bit. Or in a good market, then companies have more opportunities and they're looking for more flexible capital, more transitional capital. And this is very positive for our type of product. So I would say that all markets are good markets, but specifically today, the market is excellent for us. We see tremendous opportunity from companies looking to expand on their business model that can't find the flexible financing from the banks or alternative sources, and this is where Incus is able to come in and provide that financing. Well, historically, Incus's investors have been institutional investors. So throughout all of the funds that we've raised thus far, we've mainly targeted international investors and large institutions. Again, pension plans, insurance companies, large family offices. Generally, the tickets that they invest with us are between 20 to 50 million euros. And why have we focused on the institutions globally? Well, because we don't have a distribution channel. I mainly do the fundraising for the company, and I do travel all around and I raise this capital globally, but I don't, I'm a one-person shop, so I'm not able to distribute a product to more of a high net worth investor base, and this is why we need to partner with A&G. So we think that this is a perfect marriage. You have a firm like Incus providing a unique product, and you have an excellent firm like A&G with a very strong sales force with an excellent client base, able to access investors that we've never traditionally been able to access or tried in the past. And this is why we're now distributing our product here in Spain, because we've been getting a lot of inquiries asking about our product, because we've been in the newspapers and Expansión quite a bit, and we're getting a lot of inbound calls asking how they could access our product. And we don't have the contact base with these investors, and this is why we've been speaking to A&G to start distributing our product to investors like you.